a lackluster day once again. Where we did see a bit of strength coming through was the financials and the banks gaining almost 1%. Resources, though, down around 0.5% in today's session, again adding the pressure that we see.
Yeah, I think you hit the nail on the head when you said lackluster. Market really struggling in negative territory for most of the day and then eking out a small gain towards close. Really on the back of concerns about this impasse in America over the debt ceiling. Concerns also about obviously Greece continuing to hamper the market. And we really seem to be trapped in a very narrow range at the moment. The market trading very much on the top 40 between this 28 and 29,000 level and really not showing any signs of going anywhere in a hurry.
8.1 billion rand passing through the market, Brett. I mean, you're talking about markets not going anywhere in a hurry. What sense do you get from the US and from Europe? It seems that we're worried about debt, but we know that they're going to fix the problem by raising the debt ceiling. Why do you think that there is so much hype around all the debt that is playing out in both the US and Europe?
Well, I mean, it really comes down to this. At the end of the day, if you're going to keep printing money to get out of these debt problems, you're going to create inflation later on and you're going to draw out the problems. And that really is going to hamper growth for the next couple of years going forward. So I think the thing about it is the more you see the markets having to be stimulated in order to get the markets going again, there's just a general concern amongst investors that we're not really solving the problem. We're just sort of moving from one crisis to the next.
Investec down quite heavily today, though. PLC and Limited down 2.38% and 1.25% respectively. Why are we seeing Investec down so significantly when we've seen other banks doing quite well in today's session?
Yeah, nothing really I could put my finger on for Investec to be weaker. Certainly a stock that we like and we've got an outperform on it. So nothing that I could see in the markets today to really explain the weakness.
Of course, the likes of Standard Bank up around 1.3% in today's session. Old Mutual, though, down 1%. I know that your pick here is the likes of Nedbank, your preferred play, it seems.
Yeah, I mean, our analysts have recently come out with an upgrade on Nedbank, a target price of 170 odd. So, that would be our top pick amongst the banking stocks. We'd have holds on Standard Bank and FirstRand and also on Absa at current levels and an outperform on Investec. So, of the banking stocks, our top two picks, Nedbank and Investec at the moment.
With the likes of Anglo Platinum out with results today, an increase of headline earnings per share of 20%. Cash costs increasing, though, around 13%. We know that one of the biggest issues when it comes to the miners in South Africa, again, it's got to do with safety, it's got to do with wages and electricity. Would you be buying Anglo Platinum at these levels? We're sitting at around, in fact, 600 Rand on the dot.
Yeah, certainly the big concerns for Amplats was obviously the costs. Those are moving up quite quickly, and then as you mentioned, how to get it under control at the mine so that there aren't so many deaths. At 600 Rand, we would have it as an outperform target of around 750. I wouldn't be rushing out to go and massively accumulate, but under 600 Rand it is starting to become quite attractive.
With regards to Anglo American, Kumba Iron Ore also out with fantastic results, even though we saw Kumba coming under pressure last week due to those numbers. But Kumba's up 1% today. Anglo Platinum having good numbers. What are you expecting for the likes of Anglo American?
Yeah, certainly Anglo American, we've also got an outperform on. We'll see those Amplats numbers starting to come through into the Anglo's numbers. So Anglo's sitting around 335, our target price on a 12-month view around 400 to 410. So certainly an accumulate as well.
Brett, just lastly, taking a look at the overall markets, the massive play between the likes of the banks and the resources, it seems, of late. But you mentioned a little earlier that we're stuck in a very tight range. For traders, clearly not very good news, but for those who want to buy and hold for the long term, perhaps you have to look out 6 months, even to a year. What is your advice out there for those who haven't entered the market as yet? Would you be waiting before you head into the market?
Yeah, we've got our market now flirting very much with its 200-day moving average. That really gives you the long-term barometer of whether the market's in a bullish or a bearish phase. And we're holding just above it at the moment. If you see the markets come back significantly from current levels, I'd certainly be looking to accumulate because we'd expect the markets to move up over the next 6 to 12 months. If I was taking a 1 or 2 week view, it's almost anyone's guess, but certainly we would still be recommending to accumulate on weakness.